an incredibly well-run business called Games Workshop.
One of the greatest businesses that we've seen in terms of quality and capital allocation.
One of the largest companies in the UK with a 4.7 billion market cap, dealing in very traditional, old-fashioned products, board games.
They built 5 billion franchise around Warhammer.
1,467% overall return just in the 9-year period since 2016.
Plus, they do pay dividend around 3.3%. The key thing is now, would they be able to turn what they have created already into something bigger and more?
Welcome to the latest edition of the Intelligent Wealth Podcast. With me today, as usual, my usual fellow presenters, Awet Gourmet, who is Head of Research at Minerva Money Management, our fund management company, and my fellow director, no less, Carl Roberts. I'm Tony Byrne. This is the Intelligent Wealth Podcast. Just to explain what it's about, it's really a podcast for serious investors who particularly enjoy investing in what we call quality investing techniques, where you're looking primarily at the quality of the company as a long-term investment. We're not giving advice. We're just stating our own opinions. I do always emphasize it's important you do your own research, because in my experience that whenever you try to follow other people's recommendations, it invariably goes wrong, because your investment has to suit your personality 100%. It's got to suit your attitude to investment risk, your philosophies, your values, your time scale. And it's different for every one of us because we're all wired differently. And it's a lazy thing to do, just to accept a share tip, like taking a racing tip. Invariably, it won't work. So just treat this podcast as some three people who've got interesting, different views that will help you in your own research, but you should do your own research too. So we're going to focus today on one particular company that we're going to talk about. The companies we discuss in the show, our fund doesn't necessarily always invest in them, but the one we're going to cover today is a company called Games Workshop. I'm very proud of this company because it's a British success story. We don't have many of them these days. It's a diminishing number. But this company we like because it's particularly unique and highly, highly successful. So let me just tell you a little bit about their background. They were founded in 1975 by three fellows. I've got to look their names up because they're not household names. John Peake, Ian Livingston, and Steve Jackson. And they just started off making simple wooden board games, very humble beginnings. But eventually they secured the UK rights to one of their games called Dungeons and Dragons. But what then followed a few years later, well, they produced a couple of games called Warhammer. And this is in the late 80s. And this was a major success story for them. That led to a management buyout in 1991. And they first floated on the London Stock Exchange in 1994. Unusually, this isn't a company where the CEO or the board of directors has a major shareholding. We call it skin in the game, and we usually like companies where there's a visionary founder owner with at least 10% of the shares still running the company. That doesn't apply here. It's not a rule that we steadfastly follow, because what we recognize is that there are some companies where the exception proves the rule. So some companies don't have a visionary founder owner with skin in the game, but they are run like that type of business. And if they're run like the same way, when we still think it's worth investing. Now, the guy who is the CEO and has the biggest shareholding out of the executives is a guy called Kevin Roundtree. Now, he only owns £3.1 million worth of shares in Games Workshop, which equates to 0.06%. It's very, very tiny. And the rest of the board of directors, between them, only own £300,000 worth of shares. So it's very, very small, their holdings. Having said that, it's been an incredibly well-run business. and we're going to expand on the reasons why we particularly like it. It is one of our holdings. As I said, it's not a recommendation, but you make your own mind up once you've heard contrasting views. What I'll do is I'll hand you over to the real experts of this show, Awet and Carl, to discuss more detail about it. So maybe we could just kick off with Carl, and let's look at the performance figures and competitive advantages, business model, those kind of things. Let's hear your insights, Carl.
Yeah, sure. Thanks, Tony. Yeah, like you said, another British success story. So Games Workshop listed on the London Stock Exchange back in October 1994. So it's been public for around 31 years now. So we're not talking about, a brand new company. It's quite a long-standing company that's been around for a while. It's under the ticker GAW. So its share price at launch was around £1.24, and it then hovered around this figure, between that figure and around £9 until the end of 2016. So if you'd held it during that period, that 22-year period between launch and 2016, you'd already seen a 625% overall return, or 9.5% if we use a compound average growth rate. But then since the start of 2017, there were a few pullbacks in between, but it's been on a meteoric rise to today's price of £141. So bear in mind, listed at £1.24, and it's now at £141. So that's a 1,467% overall return just in the 9-year period since 2016. So that's nearly a 36% compound annual growth rate over the last 9 years. And if you have held it all the way since the beginning, you'll still find that that's a 16.5% compound annual growth rate over the 31 years. So it's now a FTSE 100 company, one of the largest companies in the UK, with a 4.7 billion market cap. So it's been on quite an incredible journey, really. And I think what's fascinating about this company is that it's still dealing in very traditional, almost quite old-fashioned products. It's board games, it's actual physical figures. It's a very niche company that appeals to people that have a real die-hard enthusiasm for their products. And it's like a real massive hobby to the people that sort of buy into this company and its products. So it's really quite interesting. It's hard to find another company out there like this, because obviously over the years board games are probably played with less and less, and it's gone into like computer games, isn't it? Most kids nowadays play computer games, PlayStation, Xbox, those kind of things. But this company has been able to thrive using still the traditional kind of board game style play. Now it has branched out into things online now, and we'll probably cover this later on, but it's new kind of innovation is going into selling its kind of licensing to the likes of Amazon to create content now, films and series and things like that. But still the core business is very much the traditional board games, which makes it quite hard for someone to come and replicate this model or compete with them, because it's got such a fan and love for the company that, for another company to come along, it's going to have to spend years and years to build up that kind of reputation. I mean, the people that play these games, they literally will get the figures out of the box and painstakingly paint them, into the certain characters. So you can't underestimate how much this kind of company is loved. Interestingly, it still has around 500 shops, usually one-person shops around the world, as an online store. And like I said, it's gone into now licensing. Really, really interesting company. Over to you, Awet.
Right. Yeah. Games Workshop, I think you mentioned the return. It was a great return. Plus, they do pay dividend around 3.3%. So when you include a dividend, the company has done really, really well for investors over the last 20 years. It's a very interesting company, as you mentioned, Tony. They built 5 billion franchise around Warhammer, through the years. And I think the interesting part about this gaming is the minis, which is miniature, sold unpainted. People paint these games, and when they play around in games, it creates a lot of emotional attachment to them. That's why they keep buying it from Games Workshop, and they buy the materials, well, the painting, the brushes, and so on. On the top of that, Games Workshop makes a lot of money. Um, so the business model is pretty much 80% of their revenue comes from abroad, which is only 20% in the UK. The rest is from the rest of the world, the US, and so on. And when you go to YouTube, they have around 1 million YouTube subscribers. So they have a lot of fan base around the world. And I mean, as we mentioned as well, when you buy the kits, and the kits are quite expensive when you look at online, and Games Workshop have a very strong pricing power to increase the prices, and they have been increasing the prices over the years. As you mentioned, Carl, as well, the moat is very strong, and it's been growing. And yeah, it just the main one is the skin in the game, which is very small percentage. The management don't have a significant skin in the game. And there was an inclusion at the FTSE 100 in 2024. The index fund now are becoming one of the biggest buyers in the investment world. So the inclusion will make Games Workshop stocks to increase because of the index buying going on. So it's very interesting company, and the interesting part is, well, when we look at the growth stage, when you look at China, for example, is expected to grow. They recently went to China, and there's a huge market we expect Games Workshop to gain in the Asian market, specifically China. And when we look at abroad, the toy and hobbies market is expected to grow from 5 to 7% compounded annual growth rate in the next 5 years. But when we look at the digital gaming, which Games Workshop trying to get into it by the IP and so on, is expected to grow around 12% in the next 7 years. So there's a great growth rate for Games Workshop to grow into this market and to take a big market share, because there's no one can compete with pretty much with what they're doing, because most of the competitors, they don't have the same amount of strengths as Games Workshop. When we look at the company in terms of like capital allocation, pretty much one of the best we have seen in the industry. When we look at this return on invested capital is almost 70% in the last 5 years average, and return on equity 60% in the last 5 years average. So that's a strong profitability and capital allocation, and management understand how to allocate capital, and historically has been delivering a great return for investors. The company has just amazing return on all investment. That's why I think when we're looking for investment, I think it would just keep coming up because of that, the high return on investment and profitability. It just kept coming up. Finally, we decided to make the research, and we bought it a few years ago. So the company is one of the greatest, I think, businesses that we've seen in terms of quality and capital allocation.
Yeah, what I thought was interesting was wondering to myself, what type of customers do they attract? Because I've got a 16-year-old stepson who, like a lot of kids of his age, play the typical games they play is the things like FIFA and other games. And when I said to him about Games Workshop and Warhammer, he'd never heard of it. And so I thought, that's interesting. So we looked into it, and it turns out that the typical Games Workshop gamer is older, not old, but older, like late 20s, early 30s. And and so it's interesting because gaming is so popular now and so addictive that Games Workshop are in the right market for it, because it's not just the physical game. They're getting more into the digital game side of things. But interestingly, if you look at the United States, 6 out of 10 people are not even looking to be in a relationship or to even date. And the flip side of it, the unfortunate side of it, is that young people, because they're still young people, they're not kids, but they're young adults, are so obsessed, especially young males, because a lot of the customers are male of that age group. But they're so busy gaming that they haven't got time for relationships. So unfortunately, it's a bit sad as well. But the positive side for Games Workshop is that this market is going to continually want to buy their games and their miniature soldiers, for the Warhammer games, and occupy themselves that way. So I just thought that was an interesting variation on the typical game. And the other game I was thinking of that my 16-year-old plays is Fortnite, of course. And these games, Fortnite and FIFA, must be well known to most listeners to the show today. So I know that Games Workshop has got many, many competitive advantages. Would you like to comment on those, Carl?
Yeah, certainly. I mean, one of the things I would say is it's got good vertical integration. So it basically designs its own product, manufactures it, and markets and sells it direct to consumers. So it kind of controls the whole production line, really, when it comes to its products. It's quite a premium product. So, again, for a competitor to come in, it's they're not going to be able to make the product probably as good and as quality as the product that Game Workshop does. So the fans behind it again really appreciate the kind of quality of the build of all the models and things. Once you've invested into Games Workshop in terms of a player and you've played some of these games, you're constantly collecting your bits of the game. So once you put effort into painting the models, you've invested significant sums of money in the models, you're not going to come away from that easily because you've invested a lot of time and money into it. So its fans are quite sticky. It's built up a very big kind of brand now in a lot of the games, like you've mentioned, Warhammer. So again, now it owns the license for this brand, so it can now license out, like it has been doing, to other businesses that will create a lot more content. So it's almost going to bring the wooden games online, into PlayStations and Xbox, and we know how big the market share is for kind of gaming and thing, more modern style gaming online. So there's loads of potential there. And yeah, I think just difficult to kind of break into. It's such a niche kind of product that because it's got global reach, there's enough people that want to play this game and stick with it.
Yeah, what's an interesting aspect of them is that in an age where we use a lot of overseas cheaper labour, they've decided to be resolutely British, and their manufacturing base is where their headquarters are in Nottingham.
Yeah.
In for those people who don't know the UK that well, it's in the Midlands, I think you'd say. So in sort of the mid, if I could say mid part of England, like halfway between the south coast and Scotland, I would say Midlands. And I think, like you said, Carl, the fact that they control the whole process from manufacturing all the way through to delivery, and they've even got their own 500 shops in the UK, is quite interesting. They've got whole control of it all, and they've got this fanatical fan base, which it's in a way reminds me of Amazon. People are just absolutely hypnotized by, not Amazon, Apple. They're absolutely hypnotized by Apple, that has this tremendous fan base. And once you get to having fans rather than just customers, I think you're on a whole new level that causes great devotion and great predictability of results for years to come. What do you think of what you've got to comment on that, Awet?
Yeah, I think the interesting part I see, the overall the company is, excellent capital allocator, very profitable, when we look at the profitability and so on. But the key things I think now is that, to scale this business, I mean, as I mentioned earlier, I think to scale it, I think you have to be aggressive more in China. In the IP business they have with Amazon, the contract, they need to deliver that. Once they deliver that and they have an IP business, the company profit would increase over time, because I think that's what we want to see. The IP business to sell more intellectual property and to increase the IP business over time. so that they not relying on just a traditional game, but they are moving with the modern world to digital, sell the IP business part of their business. So I would like to see that part of the business growing. In terms of the company of valuation as well, the company is trading pretty much around 24 times earning and 21 times free cash flow. And when you look at the discounted cash flow, the market is expected the company to grow by 10%, which is fairly, I think the company has been growing more than 10% in the last 10 years. But the key question is, can they be able to deliver 10% moving from now on? And I do think the company has done really well, and they have been very, very good at capital allocation. The one thing they have been doing is anything above 80 million in their balance sheet, they turn to return it to investors through dividend, which is, I would like to see them to invest and being more aggressive, especially in the market they see opportunity like China, for example. And instead of paying dividend, but I think that's their policy, and they have been doing it for years, and they have, paying dividend and so on. So yeah, I think the company, if they can deliver that, the valuation is not overstretched and it's still fairly valued and so on. And one part as well, they do not do like any mergers, or they're not planning to buy any business. They just planning to grow the business that they already have. So in that case, you expect them to be more, futuristic and so on, to increase their business into digitalization, to do more games and to sell more IP businesses and so on. I think that's what we would like to see, because the world is digitalizing, and we can see the traditional toys businesses are slowing down in comparison to digital businesses, where I think we would like to see Games Workshop tap into this market, and not just tapping into it, being more aggressive and so on into this sort of market.
Mm. Yeah, the key question to me is how long can they sustain this? Because to be fair, their customers are still relatively young. They're not the youngest gamers, but late 20s, early 30s. These people are unlikely, especially if they're all men, they're unlikely to change their habits, for decades to come. It does appear they've got a lot of sustainability, I would have thought.
Yeah, I think it's a difficult to tell. They have this sustainability, but we have to remember Warhammer and the game, what they're doing is a luxury hobby. It's not essential, right? As you mentioned, their customers are middle-aged. Well, they have more money to spend, and that's why they can afford it. It's quite luxury. So this is the thing, because the study shows most people are not, as you mentioned earlier, are not dating, or not even considering to date and so on. But so what they're doing is they're increasing their hobbies, which is they spend hours and hours painting this games over time. I think it's just not because it's not just a game anymore. Once you paint it and you spend like hundreds of hours creating this game, is becoming quite something more than games. There's more emotional things to it. I think that's why Games Workshop has done really well, because it's not just they selling games; they're selling some more than games. There's more emotional attachment to it.
Yeah,
I think in terms of moving forward and growth, I mean, essentially at the end of the day, they've got to continue recruiting new hobbyists, haven't they? Because you can't just stick with the same customer base forever. They'll eventually get older and eventually die. So they need a constant supply of new people joining their games. And so one of their challenges is going to be, as we move to a world that perhaps is less sociable in terms of interaction face to face, are you still going to be able to play these games if you're not meeting up with people and getting the board out, and it's sort of moving more and more and online. So whilst they have clearly going into the online world and electronic gaming, that becomes far more competitive, because you're now going to have to start breaking through and recruiting new gamers that are already playing like your Fortnite, your Call of Duties, everything else. So that's going to be harder, but that's their challenge in terms of new hobbyists. You mentioned how it is quite an expensive game to play compared to others. You do have to invest a lot of time and money into it. So, it's a discretionary product end of the day, isn't it? So if the world goes through recessions and hard times, you'd expect sales for this type of company to be down because people aren't just going to be able to afford to pay that premium price for these sorts of games. And interestingly, if we look at that during COVID and coming out of COVID, with the high inflation and cost of living crisis and all of that, you did see a 50% drop in share price with Games Workshop. So from around late 2020 to sort of May 2022, there was a 50% drop in share price. So this company is not immune to shocks in the system. It is going to go along with kind of recessionary cycles and things. So you've always got that risk as well. And the other thing is with the new IP deals and the licensing to the likes of Amazon, you can see the absolute potential there. But as we've seen with likes of Marvel and some of the other games that have tried to turn into films, this can go very badly wrong. Can't it, if you oversaturate the market and you're just seen as trying to be a commercial entity and produce films for the sake of it to try and sell more products, and you can really, really damage the brand quite quickly. So, whilst it's good to go into that area, they've got to make sure they get it right and get the essence of the game, because that's what these hobbyists want. Is they're in it for the love for the products, so they won't want to be sold rubbish online through the films and series and things. So there's definitely still challenges to kind of maintain this level of success.
Yeah, I mean, even when you look at their balance sheet, I think most of their revenue, 80%, as I mentioned earlier, comes from abroad, outside the UK, and the company doesn't use any hedging strategy to currency exposure. And I think we've seen historically, the dollar, for example, it was down this year around 8 to 10%. So there is a currency risk as well, being exposed and not hedging. Which, of course, when you hedge as well, it comes with with cost. Hedging is not free. So, but they decide to not hedge, which comes with currency risk. But I think this company, what they have done really well is, I think what we learn from great companies, are they find a niche and they find the niche and they grow out of the niche, right? Amazon, for example, the case for Amazon was bookstore. They found a bookstore. Now Amazon, they just not bookstore anymore. They are pretty much everything. They have, AWS. And I think the company is very profitable. The key thing is our management. I think they've proven to be exceptional overall. The key thing is now would they be able to turn what they have created already into something bigger and more? And I think that's what we're watching, especially the Amazon deal, as you mentioned, Carl. It can go either way, but more likely to be the right deals because when you look at the annual report, management were not interested just on the deal. They were make sure the deal is alignment with their, principle and values. They were assessing it. So it shows you the management, the way they think is not just short term to just make money. They are thinking long term, how they can, grow this business, not just to grow it, but to make sure, the growth comes with integrity and alignment with the company long-term vision. So there's a lot of things to like about management for this company, even though they don't have a significant, skin in the game. Overall, pretty much they control around 0.06% of the company, which is 3.4 million in total, which is not much.
Absolutely not much. Well, guys, this has been a fairly fast summary of Games Workshop, because it's not really a household name, and they're not that well known, the executives in Games Workshop. So we'll probably come to a natural close, I think, unless you've got any closing comments you'd like to each make.
I think it's worth going back to mentioning the dividends again. This company, as well as significant growth, has been a massive dividend machine. So if you're a dividend investor, it's worth looking at it for that alone. I think if we go back to 2017, dividend payouts £1.45 a share, to 2023, £4.15 a share. So it's really raised its dividends significantly over the years. It doesn't do it as a kind of, it tends to do it like Howard said earlier. It's one-off hits from surplus cash, but it's because it's done so well over the years. It's paid out some good chunky dividends, well above the FTSE average. So it might be worth looking at it from that point of view as well.
Yeah, definitely. And you, Howard, any closing comments or thoughts?
Yeah, Games Workshop has been exceptional for investors over the last 20 years. And I think as an investor in Games Workshop, we expect this trend to continue in the next few years.
Okay, so to summarize, Games Workshop is not selling toys. It's selling identity, mastery, and a world to invest in, literally and figuratively. It's got luxury margins, a fortress IP, and growing licensing. The upside is a mainstream cultural breakout. So we'll mention and put links into the show notes, and we also have a one-page company snapshot, which you can use to aid you in your own research, because as I said to you earlier, this is just our own opinions. It may not be ideal for you, the company. Just to let you know, our next episode will be on another company, another very, very fascinating company called ASML. It's not a household name, but once you've listened to this episode, I think you'll find it absolutely brilliant. So if you're listening to this on Apple Podcasts, please give us a review so we can get more viewers and listeners and invite better and more high profile guests to the show when we do our one-to-ones. And all I've got to say really at the end of the show is thanks for your attendance, guys. You've brilliant insights as usual. And thank you, listeners, for listening to our show. We look forward to welcoming you to our next one. And have a great day. Bye for now.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.